Joining me in San Francisco for NAREIT's REITWise Law, Finance, and Accounting Conference is Ron Bohlert, Director of the Global Corporate Client Group with NYSE Euronext. Ron, let's start by looking at the REIT IPO market. How would you characterize where things are right now?
Well, in 2010, we had a very successful year with REIT IPOs. We saw 10 initial public offerings come to market, raising just under $2 billion in capital, which we saw as a nice continuation from the 9 IPOs we saw in 2009, following what many considered to be the bottom of the financial crisis in early March.
And what about the REIT activity in the secondary market?
That was a very big factor in 2010, the secondary and follow-on offerings in the REIT space. The NYSE-listed community saw 105 secondary offerings, which raised close to $24 billion in capital. Now, these companies were able to utilize this capital in an effort to deleverage their balance sheets, in some cases to gain cash for opportunistic acquisitions, and in some cases for growth. Now, if you look at how this had a trading impact on these stocks, it appears as if the investment community approved of these measures. The NAREIT All REIT Total Returns Index saw 27% gains in 2010 versus 15% gains in the S&P 500 and 16% gains in the NASDAQ Composite. So comparatively, you can see they outperformed even with all of this capital raising.
That's tremendous activity, especially considering how low things got during the economic recession. Now, what are your expectations for what happens in 2011?
2011, it started off quite well. We had 2 REIT IPOs right out of the gate, raising just over $800 million in capital, and 20 follow-on offerings already, which raised just over $5 billion in capital for the REIT space. Now, that being said, things have slowed down a little bit. Political unrest overseas, rising commodities prices have caused a lot more volatility in the market over the last few weeks and have caused some of these REIT IPOs and other IPOs to stay on the sideline. Now, looking forward, we still have a very robust IPO pipeline out there with 18 IPOs filed and ready to go to market this year. And if they should all come to market, we can see an additional $5.5 billion in proceeds coming out of these offerings.
And lastly, you mentioned the companies that are in the pipeline. The majority of public REITs do choose to list on the NYSE. Why do you think that is?
I believe there are 4 main reasons why they and other companies choose the NYSE. First off, our unique trading platform. We are the only marketplace that offers a designated market maker, a human being at the point of sale, who works hand-in-hand with our electronic trading model and serves to provide liquidity and dampen any volatility that should occur, which in recent times has been very important. Second, your community. There's a belief out there that perception does matter. The average market cap of a New York Stock Exchange stock currently stands at around $2.3 billion. Only 4% of our listings are below the $150 million mark. Companies like to be associated with the best-in-class in their field or in their sector. Visibility. The New York Stock Exchange's global brand provides companies with a unique platform to speak with and interact with global, political, and industry leaders. And last but definitely not least, market information. The New York Stock Exchange, in conjunction with our DMM community, work together to provide our companies with real-time trading information and updates to keep them well informed of what's happening within their securities.
Ron, thank you very much for joining us.
Thank you.
For more on this and other news and information, be sure to visit REIT.com.